Welcome back to Investing Talk Podcast. Today we're zooming in on RTX Corporation. You sent in a bunch of recent reports, and our goal is to really pull out what's most important for you right now about this huge aerospace and defense company. We'll look at financials, key developments, what the experts are saying.
Yeah, we've got a company overview, a May 2025 update, and actually a detailed due diligence report too, all from this month. So it gives us a pretty current snapshot.
Good. Let's get right into it then. So RTX, it was formed back in 2020, right? For the United Technologies, Aerospace Bits, and Raytheon merging.
That's the one. And they operate through three main units: Collins Aerospace, Pratt & Whitney, and Raytheon itself.
So it's a really broad reach. Think aircraft engines, missile systems, cybersecurity even. Covers a lot.
Yeah.
Okay, let's maybe unpack their recent financials. Q1 of this year.
Okay, so what's really standing out is the growth. Sales hit $20.3 billion. That's a 5% increase year over year.
Okay, 5%.
But if you dig in a bit, the organic growth, so stripping out divestitures and things, that was actually 8%.
Oh, wow. Okay, 8% organic.
Hmm.
That does show some real underlying strength in the core business.
It does. And profitability looks decent, too.
Yeah. What were the earnings figures?
Well, GAAP EPS, that was $1.14.
Yeah.
Adjusted EPS came in at $1.47. And that adjusted figure, that's up 10% from last year. So a solid jump.
10%. Okay.
Yeah.
That's healthy. And looking forward, you mentioned predictability earlier.
Mm-hmm.
What about their order book?
Huge. The backlog is sitting at $217 billion.
$217 billion. Wow.
Yeah, and if you break it down, it's about $125 billion commercial,
Yeah.
$92 billion defense. So what this tells you is they've got a massive amount of work already lined up, because a lot of visibility on revenue coming down the pipe.
Right, visibility. And are they actually turning orders into cash? What's the free cash flow look like?
It's strong. For Q1, free cash flow was $792 million.
Nearly $800 million in a quarter.
Exactly. And that kind of cash generation, well, it supports everything: operations, investment, giving back to shareholders.
Okay. And speaking of recent activity, that May update had some interesting points, didn't it?
It did. A couple of key things. First, Raytheon had a successful first flight test for its Phantom Strike radar system.
Phantom Strike. Okay, so that's a defense tech advancement.
Precisely. It signifies, their continued push on innovation in that really critical defense sector.
Pushing the tech envelope. Anything else that caught your eye?
They also showed off some new software. It's aimed at improving airspace deconfliction, basically helping aircraft manage crowded skies and plan missions better.
Deconfliction. That sounds increasingly important with more drones and air traffic.
It really is. And it wasn't just R&D. They also locked down more business.
Oh, yeah.
A big contract modification, $2.13 billion, just reinforces their position as a top-tier defense contractor.
Yeah, $2 billion. Okay. Now, thinking about investors, any news on shareholder returns?
Yes, actually. They announced a dividend increase, about 7.9%, bringing the quarterly payout to $0.68 per share. That's payable in June.
Almost 8% hike. That usually signals confidence from management, doesn't it? About future earnings and cash flow.
Generally, yes. It's often seen as a positive signal about their financial stability and their outlook.
So if you kind of piece all this together, the earnings beat, the tech wins, the dividend hike, what's the general feeling out there? What are analysts saying?
Overall, the sentiment seems pretty positive after the earnings and these updates. If you look at average analyst price targets, they suggest there could be some potential upside from where the stock is now. And like we just said, that dividend boost definitely helps investor confidence.
How does RTX stack up against the other big names? Lockheed Martin, Northrop Grumman.
It's a very competitive field, no doubt. RTX is right there with them.
What makes RTX stand out, or maybe what are the key differences for you?
Well, one of RTX's big strengths is its diversification, that mix of commercial aerospace and defense. Plus, they have a strong innovation pipeline. Lockheed, you often think leading defense market share, advanced tech, maybe stronger margins historically. Northrop Grumman, also a major player, very innovative, and they boast a big backlog too, similar to RTX in that regard. So RTX is kind of dual exposure, commercial and defense. That's a key characteristic.
Okay, let's zoom out a bit then. What about the bigger financial picture? Full year 2024, and what are they expecting for this year, 2025?
For 2024, revenue is about $79 billion, and the forecast for 2025, they're guiding towards $83 to $84 billion.
So expecting growth there. And earnings.
Same story. Adjusted EPS for 2024 was $5.73. For 2025, the projection is $6 to $6.15 per share. So yeah, increases across the board point to a positive trajectory.
And that cash flow theme again, how did that look for the full year, and what's the outlook?
Right? Consistent cash generation. They did about $4.5 billion in free cash flow in 2024, and the projection for 25 is quite a step up, $7 to $7.5 billion. It's also worth noting, they've had pretty consistent organic revenue growth over the last, say, 3 to 5 years. Shows the underlying business is quite stable.
Okay, stable base, growth outlook, but every company has risks and opportunities. What should you be aware of with RTX?
Opportunities first. Well, definitely continued growth in commercial aftermarket sales. That was up 21%, which is huge. And continued expansion on the defense side, obviously supported by that enormous $217 billion backlog.
Makes sense. And the risks?
The potential impact of tariffs is one thing mentioned in the reports that's always something to watch in this global industry. And of course, their heavy reliance on government contracts. That always carries the risk of, budget shifts or changing government priorities. Although, importantly, no major new legal or tariff issues popped up in this latest May update.
Good to know. What about their built-in advantages? What gives them an edge?
Well, they have a huge portfolio of patents, real technology leadership in key areas. Think missile systems, radar, jet engines. Pratt & Whitney is a cornerstone there. Plus, really strong brand recognition globally, especially with government and military customers. And we keep coming back to it, but that backlog provides a level of stability and predictability that's pretty valuable.
And who's steering the ship?
Chris Callio is president and CEO. He's been in that role for a significant time now, so that provides leadership continuity. He's overseen the merger integration and this period of pretty consistent financial performance we've discussed.
Okay, so let's try and bring it all together. It sounds like RTX is showing pretty strong financial performance, driven by demand in both commercial and defense. That huge backlog, the tech advancements, it suggests a solid foundation, potential for more growth.
Absolutely. But, like we said, you need to keep an eye on potential headwinds, tariffs, government spending dynamics. Those are always factors.
Right. And that dividend increase, that's definitely a tangible sign of management confidence. Could be attractive if you're looking for income. Analyst sentiment seems to back that up too.
It does seem to align.
So this overview should give you a much clearer picture of RTX based on the latest info you provided. Of course, for even more detail, you can always check out RTX's investor relations site, SEC filings on ADGAR, or reputable financial news sources.
What's really fascinating here is watching RTX balance that commercial aerospace recovery against the sustained high levels of defense spending. That diversification, it really could be a key strength as they navigate whatever economic shifts come next.
That's a great point. It really raises a question for you to think about. How will those two big sectors, commercial aero and defense, continue to influence each other and shape RTX's path in the coming years? Definitely something to ponder. Well, if you found this look at RTX helpful, please do subscribe, like the video, and maybe leave us a comment. Let us know what other companies or topics you'd like us to explore. Thanks for tuning in to Investing Talk Podcast.